Hey guys, Alex from MarketWise Asia. Today it is the 7th of August 2023. As usual, today is a Monday afternoon. Gonna do a updates for my seasonal vantage insiders over here. So before I kickstart this updates, right? Just as usual, a disclaimer first. Whatever I share in this video is just for education and information purpose. It is not a recommendation to tell you what to buy or what to sell. So please do your own due diligence. Okay, so let's get started. So what are the sectors, what are the industry, what are the stocks that I am looking at right now? Okay, so before I kickstart this session, okay, so if you want the latest market updates, I actually did okay the usual Facebook Live and YouTube live stream last Friday, so you can just have a recap on what's happening in the market. You can go back and watch the video. It is free for all. Okay, you can watch on the Facebook page or on our MarketWise Asia YouTube channel over here. So just a very brief recap over here. So right now, what I'm seeing right now on the chart, it is the S&P 500 futures, 500 futures. So if you actually watch the market on last Friday, okay, in fact, before I ended my Facebook Live, right, the market was actually pretty bullish. It was up, I don't know, I think near 1% that kind, or at least 3.5% that kind for indices. But subsequently, okay, towards the closing, the market actually, have had a sell-off over here. This is the S&P 500 futures. Can you see over here, there was a long shadow over here. The market actually, went higher initially, but subsequently came back down, all right, and had a sell-off. It is the same for the NASDAQ also, okay. It was initially up, and then towards the closing, it had a sell-off over here. Of course, as I'm doing this video right now in the afternoon Asian hours, the futures is up about 0.4% for the S&P 500. The NASDAQ is up about 0.5%. So you can see for the S&P 500, price actually got resisted at the central pivot range over here. This is the three lines over here. So as I mentioned during my Facebook Live, can you see that, the market generally was supported at the CPR, the central pivot range, okay, the central pivot range, the central pivot range over here. Okay, and right now for the month of August, which is this month, okay, we are 1 week past into August already. Price has broken below the central pivot range. Okay, so this is more for a cause for concern over here. And as I mentioned, there is a possibility that when price hit back to the pivot point, you get resisted, which is exactly what happened. Okay, price on the intraday basis try to go above the pivot point and then came back down again. Okay, and this is the same for the NASDAQ. All right, hit the CPR over here and then came back down again. So typically, I also mentioned last Friday that August is the weaker month. But if you are going to look at strictly based on seasonals, okay, it is actually the mid of August. It is actually the mid of August, okay, especially for the indices and also for the technology sector over here. So this is based on the stock chart over here. I will just use the SPY, S&P 500 ETF as the example over here. So, okay, SPY over here, this is from August to September. Can you see that kind of plateau in August over here until the mid of August? Then the indices will start to decline. So, so I wouldn't be surprised, okay, if price actually, maybe, this week up, kind of stay flat until the mid of August, and then price start to decline, that kind, okay. But we still have to be, be more vigilant. Need to expect that price, might not just hold until the mid of August, and price can just continue to head down lower. So again, I've been staying defensive for don't know how many weeks already. Okay, for the past 3 weeks or so. All right. So previously, just a recap, I talked about focusing on the utilities, the health, consumer staples, and quite a number of these stocks are performing pretty well. Okay. Now let's have a recap on what I mentioned last week. So last week, I actually talked about consumer staple as well. So let's have a recap over here. So I'll put my chart over here. So last week I actually mentioned, okay, no, I don't need this data first. So last week I mentioned about some of the stocks, like for example consumer staple like SJM. Okay, all right, but price continued to decline, so there wasn't any entry. Okay, and I also talk about health. One is the DXCM. Okay, it was a for last week. It was supposed to be the start of the good seasonal last week. Okay, but it didn't. Okay, after the earnings, okay, price continued to fall, so there was no trigger as well. So there was basically no entry last week. So what are the things that are in store for this week? Okay, so for this week, let's head back to our seasonal vantage data over here. This is for the July over here. Okay, as I mentioned, right, August typically not many stocks. Can you see? Not many stocks. So we can kind of do a filter over here. So once again, for this week is actually from the 6th to 13th of August. So let's filter on the date. Okay, from the 6th to 13, okay, 6 to 13, 7, 8, 9, 10, 11. Okay, 14 is another week. Okay, so let's click OK. All right, and if you can see from the sector wise, I am still actually focusing on the consumer, not consumer, I'm still focusing on the defensive sector if you really want to go long. Okay, but personally I'll prefer to chill a bit. Okay, stay at the sideline because the market seems a little bit weak. Okay, and the market could continue to come down this week. So this will be quite important. See whether the market can give us a clearer direction or not. Okay, let's say if you really want to try to find something to buy to go long, I would still prefer to look at the consumer staple and also the healthcare sector lah. So for the consumer, okay, you can see that basically consumer goods from my data is basically into two. Okay, consumer discretionary and consumer defensive. So for this week, mainly you can see that all are consumer defensive: food, household durable, staples, that kind of thing, beverages, household product. All these are consumer defensive. Okay. And if you take a look at like some of the things like hormone, okay, which I mentioned before, HRL. HRL is this. Okay, so I think about 2 weeks ago, I actually mentioned that. Okay, so if you actually go for long, you still can catch some profit until at the top of here. So there's still some meat. Okay, subsequently, our price had a pullback over here. So right now we are still above the central pivot range. So this one you could be looking at, but personally, overall I am still staying at the sideline. Okay, I'm just telling you what I'm looking at, but it doesn't mean that I will enter, but I will still prefer to stay at the sideline over here. And then for some of these things like KC, let's take a look. KC, okay, are also not very strong. Price has been declining. Okay, that kind. Okay, and we are below the central pivot range. And then we have PPC, Belgium Pride. Okay, PPC is the stronger one over here. And see that right now it was consolidating. Okay, and then price had a kind of a breakout, a huge bullish momentum, and then there's a bull flag, and then price stay above the central pivot range, central pivot range. Okay, so if you are looking to go enter long, I mean the PPC is one of them that you could be entering, but I believe for this week there might not have any signal. Okay, so this is one that is stronger. Okay, in terms of price action, PPC is quite strong. And Toll Brothers, TOLL. Okay, Toll Brothers also not looking very good. I'm starting to come down already. So all in all, I mean, I won't go through all of them over here. Okay, you can go through Hershey. I think I went through just now as in privately before. Also not looking very strong. You can see that it's all the way down. So we try not to fight the trend. This is a very nice kind of thing. Respect the central pivot range very well. CPR over here, CPR over here, once it broke below the CPR, this CPR is acting as a resistance, acting as a resistance, and acting as a resistance again. So I won't be looking at the HSY, the Hershey company over here. Okay, so all in all, I'll be staying on the sideline, even though if you really want to, you can focus on the consumer defensive or the health stocks. This week, I'm actually more interested in the short setup. So for the seasonal advantage insiders like you, right, I actually sent out the bearish list of ETF actually, last week, right? Okay, so no additional cost also, okay? So these are the one that is bearish. So I think there are some people who ask me whether we can go short on the ETF via email, and you guys email me and ask, okay? Just to share for those who are unaware, I send you the list of this ETF. Doesn't mean that you have to go short on the ETF. Okay, it can give you a warning sign, as I mentioned during my Facebook Live, right? Okay, instead of shorting, you can choose to avoid. Okay, avoid buying this. So, for example, I mentioned during my Facebook Live as well. This MSCI Singapore Cap ETF, it is actually a proxy for the Straits Time Index, the Singapore stocks, and the Singapore stocks, a lot of weightage are on the three banks. Okay, the three banks carries a lot of weight on the STI index and also on this MSCI Singapore Cap ETF EWS. So even if you don't want to go short, at least you know that, hey, I shouldn't be buying, the Singapore stocks so aggressively. I think like recently like Singtel, all the banks have been dropping as well. So this act as a warning sign. Okay. And like last week, real estate, ETF, all this stuff. So you also don't want to be so aggressive on the, real estate property stocks in the S&P 500 in the US market. So this act as a warning sign. As I mentioned, shorting and don't buy is two different things. Doesn't mean that you have to go to short. It gives you a warning sign that maybe I shouldn't be so aggressive going long on certain some of these sectors, industry, or thematics things. Okay, can. All right. So in fact, last week based on this list, I actually shorted the 1st August 2025. I shorted on the IYR. This is the real estate ETF. Okay, so there are many different ways that you can use the ETF. Of course, the simplest way that you can do is you want to go short if you want to, but okay, it is entirely up to you. But again, doesn't mean that you have to copy me, but I already exited the IYR just to share with you, what I did. Okay, so IYR, this was a very good short over here. I shorted somewhere around here. Okay, somewhere near the top, not exactly the top. Okay, on this candle over here. Okay, on this candle over here, somewhere around here lah. Okay, and then price had a 2 days of fall. Okay, so I actually had a exit somewhere near the low over here lah. Okay, not exactly at the low, but somewhere near there. This was meant to be a swing trade, so it just meant to be a few days trade. So of course, it happened to be just 2 days. Price fell quite a bit, and then I exited my position. Okay, but to let you know, for IYR, the real estate sectors, right, for this month, okay, it is still bearish. Actually, quite a number of months from 1st August to 25th of September, nearly 2 months. Okay, of course, it doesn't mean that you have to hold from 1st August to 25th September. I don't do it this way. Okay, I have to keep repeating because I really scare people, just hold, for example, short from 1st August to 25th September. It doesn't work this way. For me, it's like, I'll look for the opportunity, a swing trade, a swing short, okay, like that. Okay, maybe right now if you short, it could be a bit too late. Okay, you can wait for price to maybe retrace. Okay, then look for opportunity to go short again. So I don't hold for the whole period, in case you are wondering. So a short swing trade holding for a few days, that kind, 1 week, that kind, I have profits, I take. I have profits, I take. I have profits, I take. Okay, so in this week, okay, IRR, the opportunity is kind of gone. Okay, of course, price can continue to go lower, but I already exited already. Okay, so but I want to share with you that for this week, right, you can see that this week is from the 6th to 13th, right? So let's focus on the 6th and to the 13th. Okay, 6 to 13 over here, 7, 8, 9, 10, 11. Okay, so these are the lists that, historically, in the month of August, it is bearish for this coming week over here. So as I mentioned over here, right, during my Facebook Live, I actually did mention that the biotech is actually weak. Biotech. Of course, these are different ETF provider. This is by First Trust. Second one is by ProShares. Another one is by SPDR, XVI, and one is iShares Biotech. All these are biotech. Okay, biotech from the 8th of August to typically until towards the end of August for the past 10 years. Okay, 90% of the chance it is negative, which means that out of the past 10 years, 9 years it was down for biotech. Okay, so for me personally, I have a short position in SVI. Okay, biotech over here. So I shorted somewhere around here. Okay, so price went down a little bit. I'm still holding it. Okay, XBI. All right, so this is just what I did. Again, this is not meant for you to copy, just sharing with you what I did. Okay, I eat my own cooking. So this is based on the list that I have over here, Nasdaq. Not Nasdaq, biotech, sorry, biotech. And I also want to share with you that, some trade ideas is that, the clean energy, okay, is also looking weak, okay, for this coming week from the 9th of August, National Day, to the 22nd of August. Again, for the past 10 years, 9 years, it was down. From the steel index, this is steel, 10 August, 31st August, 11 years, 10 years, it was down. So, clean energy still, they are not looking very good over here. So if you look at PBW over here, okay, PBW, okay, this is clean energy stocks. Can you see that it is actually not looking very good as well. As of now, I do not have a position in clean energy shorts, okay? But you can see that, it was above CPR, and right now, this month, it is actually below the CPR, and it's coming down, okay? If I were to go short, I have to wait. I have to wait for price for a pullback, okay? Which means that, maybe price which is a little bit up that kind and then come back down again, okay? And then, of course, if you want to look at individual stocks and short, that is possible as well. So you can go to etf.com/PBW. This is looking at the component stock. What is inside this PBW ETF over here? Okay, so these are PBW. Okay, some of these stocks are Rivian, Expen, these are EV lah, okay, Archer Aviation, SES, Energy Vault, Quantum, FTC, Solar, also, these are actually, if you look at some of these stocks, it's not doing very well, so which is exactly the case over here, okay. You want to view all the stocks, you can check it out. As well, all these are the clean energy, EV, stocks. Okay, so there are too many lah. So basically, I keep things simple. I'll be just looking at the whole ETF if I were to go short. Another, clean energy ETF, it is actually ICLN. So at least you know that clean energy is not doing well. You can also look at other clean energy. Of course, this one, ICLN, is a lot weaker. Can you see? Yeah. So there's opportunity for you to go short. But again, I won't be shorting right now because price is already at a low over here. I want to at least for price to have a pullback over here. And then for another one that you can be looking at is also the steel ETF. This is by Vectors, SLX, the metal steel. Still, you can see the XLX, it is also kind of looking kind of toppish. Can you see that, price actually hunted the high over here. Okay, this is the high, hunted the high, and then come back down. So yeah, so still is looking pretty weak over here. Okay, so for steel, it is 10 to 31st of August. And also just to let you know, right, okay, for the month of August, can you see that a lot of these metals and mining companies, they are not looking very well. So for example, XME, I think this is one of the most popular metals and mining ETF, XME, okay, Another one is like gold, silver miners, gold miners. All these they are not looking very well. Okay, so yeah, be careful or going long on the metals miners over here. So like for example, SIL, this is the silver miners. It's not doing very well over here. Okay, and then even though the gold miners is not there, but you know that these are the metals company. So you roughly know, like for example, the GDX gold miners, it is also not looking very well. So over here, so all in all, I think I've chosen some sectors for you to look at for the bearish one. Again, it doesn't mean that you want to go short. That's one options. You can avoid them if you are thinking of going long on them. Okay, all right. So like the biotech, the clean energy, the steel, the metals mining. These are the one that tends to be bearish for this week of August. All right, so I hope you guys know what things to focus on. And if you are returning back to the equities, right, if you go back to the RRG chart over here, RRG chart over here, let's go back to the main sectors over here. Okay, so as I mentioned, I am focusing on the staples, right? So just a recap again. Okay, go to daily. Can see that the XLP still continue to hold relatively well. XLP, okay, and of course you might thinking be, hey Alex, XLE, it is very strong, and why you don't want to try to go long on the oil stocks or the energy stocks? Because it is too strong already, and the market breadth is actually at a high. And as I mentioned, right, normally the RRG chart tends to lag a little bit. Okay, by the time okay, it is very strong on the surface, it can be starting to go down already. And having said that, if you take a look at XLE, the energy graph, okay, this is the percentage of stocks of the energy stocks above the 50-day moving average. Okay, can you see that it is at 100% market breadth for this percentage of stocks, number of stocks above the 50 days moving average in the XLE energy stocks are 100%. Okay, you can see that it is overly bullish already. So can you see that typically when it is at a high over here, you have a correction at a high over here, at a correction at an overly high over here, market breadth is at a high as a correction. Market breadth at a high over here, it might take some time. Okay, then come back down. Market breadth is at a high over here, it will come back down. At a high over here, okay, there's a very good chance that eventually, the price will actually come down. So I won't be looking at the energy stocks to go long. Instead, you need to be more careful, or if you want to switch to another way, okay, you could be looking at some of the energy ETF to short as well. Okay, so for example, in this example, we can see that this, you can see over here, right? XES, oil and gas equipment. So a lot of these sectors, energy sectors are, okay, one of them is actually the oil and gas equipment. It is not doing well. Okay, 9 August, 24th August, okay, past 10 years, 90% it is down. Okay, so I really give you some of the ideas that what you should be focusing on. Okay, so August is not the best month for going long. So even though some of the seasonal data I have the long side, but I will try to just chill and stay away from it. Instead, I have been looking at the short side for a short period of time now. Okay, so once again, I hope you enjoy my sharing for this week. If you enjoy the sharing, if you find it useful, do like this YouTube video. This video is unlisted, okay, but doesn't matter. At least you give me a like so that I know that you acknowledge, okay, you understand what I'm trying to say in this video. Or you have any comments, okay, you can drop me an email, or you can comment in the YouTube video itself. Okay, I will try to answer them. And with that, I wish you have a safe and good trading week ahead. And this coming Wednesday is National Day, so I wish you have a very good public holiday ahead. So thank you so much, and I will see you guys again.